Can you have an investment portfolio that can withstand every economic shock? Well, it's like cracking the code to invest safely while making profits. No matter what happens in the market, whether there is inflation, stagnation, or recession, this ideal portfolio will continue to bring you returns. What combination of assets must you have to have a golden portfolio? Well, what if we could ask Ray Dalio, the American billionaire investor, hedge fund manager, and founder of the world's largest hedge fund, Bridgewater Associates? Interestingly, he has given his famous all-weather portfolio strategy for investors to hedge against any economic or financial crisis. What it is, and how does it have an unreal balance between assets? In this video, we will explain what Ray Dalio's all-weather portfolio is, how you should allocate assets, and which assets you should consider if you are a conservative investor. Believe us, you will be surprised to know how balanced this golden portfolio is. By the end of the video, you will have a clear picture of how much of what assets should be in your investment portfolio. Let's get started. Everybody knows Ray Dalio's all-weather portfolio strategy, but nobody knows what led him to create it. Ray Dalio, a bona fide legend in the world of stock markets, had a passion for investing in his childhood. He was a genius investor in the making. At a mere 12 years old, he tested his luck in the stock market, acquiring shares of Northeast Airlines. His finance journey continued as he pursued a degree in finance at Long Island University, followed by an MBA from Harvard Business School. Dalio's path to crafting the all-weather portfolio began with a profound interest in economic and stock market history. In the aftermath of the U.S. government's withdrawal from the gold standard during the Nixon administration, Dalio felt that conventional investment strategies, especially those heavily reliant on stocks, were excessively susceptible to the market's volatile swings. Hence, he presented his all-weather portfolio when his hedge fund, Bridgewater Associates, did not perform as expected during the Nixon shock. It was these turbulent times that led Dalio to put his investment philosophy to the test. He proposed a strategy that would later become world-famous and was designed to endure diverse economic conditions, resisting recessions, inflationary periods, and growth phases. It was based on his theory that market cycles were not only inevitable, but also predictable when approached with the right framework. In other words, the market was destined to face declines, and hence, there must be a strategy that could withstand that. But since its inception, has this strategy worked through previous decades of economic volatility? Before we tell you about that, let's first understand what this strategy really is in the first place. One of the features of the all-weather portfolio is its carefully crafted mix of assets. In simple terms, the portfolio's ability to perform well in all types of economic situations comes down to a smart combination of assets. This combination has to prevail if this strategy is to succeed. Let's see what this combination is. Number 1. Stocks. No matter which stocks you choose, the all-weather portfolio strategy says that they should make up 30% of your portfolio. There is no limitation on which stocks you should pick, but since we are talking about a safe investment strategy, it goes without saying that these stocks should be safe, despite offering moderate returns. The reason why Ray Dalio has put stocks in the all-weather portfolio is their historical track record of delivering solid returns. By owning a variety of stocks, investors get to share in the profits generated by publicly traded companies. You should know that over the last 100 years or so, stocks have shown an average yearly increase of about 10% when dividends are reinvested. So in the long run, stocks can serve as a decent defense against inflation. However, since the performance is not consistently stable, they make up less than a third of Dalio's all-weather portfolio. For instance, in 1929, the market took a nosedive of nearly 90%, and during the 2008 and 2009 financial crisis, the S&P 500 saw a 55% decline. Hence, Ray Dalio does not trust stocks much, but since they offer significant returns, especially when we are talking about dividend stocks, they cannot be overlooked. The risks involved with stocks get neutralized by what other assets in the portfolio you will know about shortly. But what stocks should you pick? Here you get two options. Either you can handpick the stocks yourself or invest in an ETF which has a bucket of stocks, balancing risk and profit. In this respect, Vanguard Total Stock Market ETF outshines others. It has been designed to mimic the performance of the CRSP US Total Market Index, providing exposure to the entire US stock market, including large, mid, and small-cap equities diversified across growth and value styles. It's because it contains over 3,900 stocks in its portfolio. Enjoying the video so far? Please give it a like and subscribe to our channel for more valuable videos on personal finance, money insights, and investment strategies. Number 2. Long-term bonds. Ray Dalio's all-weather portfolio says that long-term bonds should make up 40% of your investment portfolio. However, long-term bonds might feel less attractive due to their low returns. But you should know that investing is not always synonymous with excitement. Sometimes it's about pursuing stability. This takes us to long-term bonds, famous for their reliability and income potential. Bonds with extended maturity dates tend to shine when economic downturns strike, effectively serving as a counterbalance to the volatility of stocks. That's what you need, something you can rely on even if there is a financial crisis. If there is no crisis, stocks will offer you returns, but if there is, the losses will be dissolved by long-term bonds. But which long-term bonds should you pick? Well, instead of doing so yourself, you can invest in the Vanguard Long-Term Treasury ETF, an exchange-traded fund meticulously crafted to replicate the performance of the Treasury Bond Index with a long-term average maturity. What's more, VGLT is purpose-built to provide exposure to the long-term Treasury bond market, making it an attractive choice for investors seeking a low-risk, long-term investment horizon. Since the ETF contains a diverse range of securities, including the entire spectrum of investable U.S. Treasury bonds, it becomes unignorable. Number 3. Intermediate-term bonds. Intermediate-term bonds should make up 15% of your portfolio if you are following Ray Dalio's all-weather strategy. They play a balancing role in diversifying the fixed income segment of the portfolio, striking a delicate balance between the stability of long-term bonds and the flexibility of short-term ones. Hence, they serve as a reliable defense mechanism against the risks associated with interest rate fluctuations, while ensuring a level of liquidity. No doubt they offer less returns than stocks, but they act as a buffer during an economic crisis, which stocks do not. But how can you pick intermediate-term bonds? Well, the Vanguard Intermediate Term Treasury ETF is a prudent option to pick. It has been meticulously designed to provide exposure to the intermediate-term Treasury bond market, making it an attractive choice for conservative investors. It contains all the investable U.S. Treasury bonds with maturities ranging from 3 to 10 years. Therefore, instead of picking the right bond yourself, you can invest in VGIT and have peace of mind. Number 4. Gold. Gold makes up 7.5% of Ray Dalio's all-weather portfolio. This percentage has been calculated carefully so that during economic shocks, gold can balance the risks. It's because along with other precious metals, gold is widely regarded as a safe haven asset. It has been here for tens of thousands of years and will be here forever, no matter whether the stock market crashes or there is a financial crisis. Therefore, it serves not only as a hedge against inflation, but also fortified stability during periods of economic ambiguity. But how to invest in gold? Well, either you can buy physical gold or invest in gold stocks. Yet another safer and easier option is to invest in Spider Gold Trust. It's a safe and cost-effective way to invest in gold, achieving the price of gold bullion or purest gold. Number 5. Commodities. Ray Dalio's all-weather portfolio contains 7.5% of commodities, tapping into the power of oil, natural gas, metals, crops, and others due to their demands. This might seem unnecessary. However, commodities like agricultural products and energy resources play a balancing role in diversifying an investment portfolio. No other asset does this job brilliantly than commodities. In times of economic prosperity, commodity prices typically trend upward, effectively preserving or even surpassing inflation rates. However, during economic crises, commodities have the capacity to thrive and bring returns. You see, the primary objective of having commodities is to achieve balance and stability by strategically diversifying across these asset classes. However, investing in different commodities can be time-consuming and confusing. Hence, you can invest in the Invesco DB Commodity Index Tracking Fund, designed to offer investors exposure to a diverse range of commodity futures. It includes WTI, crude, Brent crude, gasoline, gold, sugar, soybeans, corn, aluminum, zinc, and natural gas. But is the all-weather portfolio time-tested? The answer is yes. All-weather portfolio has established an impressive track record over the years, thanks to its carefully balanced asset allocation strategy. This strategy might seem too simple to understand, but it has done wonders and even outperformed the hypothetical 60-40 portfolio. Although its returns may not have outshone Warren Buffett's investments or certain tech stocks during the extended bull market following the 2007-2008 financial crisis, it did protect investors' assets. That's the very purpose of this portfolio, which has never been to outperform other investments during crises. Historically, the all-weather portfolio has successfully weathered numerous economic crises and shocks, including the 2008 financial crisis, the 2011 European debt crisis, and the 2020 COVID-19 pandemic. In particular, during the 2008 financial crisis, the portfolio outperformed even the S&P 500 by a significant margin. Similarly, its performance during the COVID-19 pandemic remained robust, with the portfolio experiencing a smaller drawdown compared to the S&P 500. Just to know how this portfolio can bring significant returns while buffering crises, you should know that if someone invested $10,000 in 1978, it would have grown to $520,000 today. You see, the focus is the harmony between the assets and not the types of assets. If you want to build a robust portfolio that can withstand literally every economic downfall, you have to keep the golden combination in mind. This golden combination says that your portfolio should have 30% stocks, 40% long-term bonds, 15% intermediate bonds, 7.5% gold, and 7.5% commodities. If you achieve this, the inherent balancing feature of the all-weather portfolio will ensure your portfolio withstands every economic turbulence coming your way. Would you like to allocate assets as Ray Dalio's all-weather portfolio does? Do you think that this investment portfolio can resist any financial shock while offering significant returns? Share right below in the comments section whether you would like to try this out. Now, if you want to learn about how the 60-40 portfolio is one of the best set-it-and-forget-it portfolio mixes, watch this video next.